Good morning, everyone. Welcome to the room. As you know, trading futures does involve risk. It's not suitable for everyone. Information and presentations for educational purposes, not a trade signal service, not intended to be financial advice. Off to another week here in the ES, and my hope is that we can break outside of this box that we've been in. We kind of formed one box back here last week, just below the negative 23, and then now we're sitting right on top of the negative 23, or you could say just below 2900 and now just above 2900. I'd like to see a close today, not just above yesterday's high, but above 2912.75. That would be the highest close that we've had in this little 6-day consolidation. Today's gap above yesterday, but still pretty well in this chunk of overlap. The gap that worked last week that I took was a gap on, was it Wednesday? This day here, where we gapped outside of not just the prior day's range, but the above the box, so to speak. I'm going to go to a 30-minute so we can see this a little bit better. So here's our consolidation block in here, and Tuesdays got ticked out, and then Wednesdays worked pretty nicely. So today, here we are up, kind of similar gap, gapping up and then getting an initial sell-off. Now our gap's not very big, so we should be able to fill it. Yesterday's close, 1275. So no, today I don't like the 5-minute gap play because there's not really, a gap to be filled at this point, and we're not quite off into the races to the upside either. And given that last week it was 50-50, not overly biased one way or another. So when that's the case, like if I get into a situation, this happened yesterday, where I was kind of waiting for a long setup, and I finally got a nice little long setup, but a short had set up right before that, and so now I had a short and a long both set up, and they both kind of failed. You would have been stopped out on both before either one got any momentum, and then even then it didn't get enough momentum to make it worthwhile. So when I get in those situations where I've got two setups kind of button heads up against each other, typically I'll just let it go unless there's something screaming at me like a low ticket lows. Then I would go for the long, or some reason to take one direction or another. So sometimes what happens is you open up, you fill the gap, and then you keep going. That's certainly a possibility. But today, with the breadth at 1.3, advanced decline line, similar to last Tuesday, actually. Hopefully it's not as slow. Man, that was a quiet day, and we've had a lot of those in the last couple of weeks. In about 25 minutes, we've got new home sales. And then that 2950 is just above us here. So the little pattern that we made yesterday is significant. When we come down, this hammer candle on the daily chart is the low bar. The lowest price was printed on this day. It went lower than the big bearish candle, which is also very significant. The high is above the prior days. The low is below the prior days. So that's a pretty bearish reversal signal. But then we follow that up with a hammer where we dip down. We look like we might break down and get a bigger sell-off. The bulls step in, push us higher, and then yesterday we're able to open at the low, close at the high, and break above that low candle's high price. That's also significant. So once again, you have a kind of a tally for the bulls and a tally for the bears. Overnight was really, really quiet. Just when you look at this distance on the x-axis from the overnight, just not a whole lot of trade happening and nothing really to pick from. So then when we turn the overnight off, you can kind of see a little bit more of a continuation from yesterday's trend. The afternoon moving up to its negative 23, and then this next retracement pulling back now at the open and holding its 50%. So that's why I like to keep the overnight off as much as possible, because there's not as much volume and it doesn't really give you a lot of useful information. I'll look for the change, or be watching the change here in the breadth and the advanced decline line. So we started right about where we're at, 1.3 and 600. And we'll see what kind of change we get. As for the market profile, here's what we've got. A lot of point of controls overlapping, a lot of value area overlapping, basically creating that box of heavily traded. So if we take, we'll go like this down to about here. That's where most of the trade has taken place. You can see when we come out of this box, it's not exact, but it's close. You get a lot more single prints up here. Single prints, meaning time only spent 30 minutes or less at that price. Come up here, a couple single prints, a little bit thicker, more time spent here, but then as we get lower, single prints, these tails of single prints, that's where not a lot of trade takes place. Conversely, these big gray highlighted areas, the point of control, is where a lot of time, the most time that day has been spent. And so as the market moves up and down through these areas, there's more resistance here where more price was traded, and there's less resistance here. Think about walking down the street. If you had, a big street corner with 100 people standing on it, that's representative of this point of control area. you've got a lot of people to walk through. It's going to take you a little bit longer. There's going to be more resistance typically. Every once in a while, you might get a clear shot through a crowd. But in general, it's going to take you a lot longer to work your way through that crowd. You're not going to be able to just go straight through without maybe pausing, stepping to the side, waiting for a few seconds, asking someone to move. But then as you come down here, if you're walking down the street and there's just one other person on the sidewalk, well, both of you can pass, and it's really easy to just continue on your path. And so if we were trading down in this area and all of a sudden we started moving lower, well, it's going to be, there's a lot less support down here. So it's going to be easier for us to move through this price area, these thinner price areas. But as we start to stack the days, thick, thick, thick price area, now there's a lot of resistance here and a lot of support. That can be good because if we trade higher and then pull back, we then have a very strong support area around this 2900 as opposed to just going straight up. This area is going to be a lot more, if we retest it, there's going to be a lot more support at 2900 as opposed to back in here where we had all the gaps and we just spent one day and then kind of moved on. So far this 50% from yesterday's kind of swing low to this morning high, holding and taking us to its negative 23% target. So that's a good sign for upward trend this morning. 23.25 is the high from the last couple of days. So to kind of flip that around, rather than talking about breaking down, we should be able to, open today is 29.15. Here. So now as we get up higher here, there's not as much resistance, and these single prints shouldn't act as much resistance, so we should be able to push higher fairly easily. Yesterday, Monday, coming off a 3-day weekend, I tend to ease into the week. I always tend to ease into the week, but especially after a 3-day weekend, it can kind of be slow into the day. And yesterday, it was a trend day by definition. We opened at lows and closed at highs. But a lot of that move happened in the first 30 minutes, and then the rest of the day had quite a bit of undulation, almost like a channel where you have deeper pullbacks. I'm going to draw up this next retracement. 15.25 is the 50. 1375 would be the stop. Breadth and advanced decline line a little bit stronger. Yesterday we did have a pullback to the halfway back that worked nicely, so I might take a stab at this 15.25. Here's that setup yesterday. The very first halfway back of the day. Pulled back nicely, but then we got this channeling happening where we were making these deeper pullbacks on the way up. That made it a little tricky to stay in anything. I'm going to put a vertical or a horizontal line up here so I know where we're at as we zoom in. Let's see how the other markets are looking. Remember last Tuesday we had conflicting market directions. So far today, YM headed in the same direction. NQ, so all three heading in the same direction. No, actually the candle's not that big. 3 points. So opened up, filled the gap right in that first 5 minutes, and then got our bounce, which that's about the best case scenario when you're that close to the prior day's close to fill it right away. Seeing that probably could have been a little bit more aggressive at the open. But you still have a breadth that's only 1.3. That's interesting. Market rallied here, but less volume has gone into stocks that are moving up. So we'll see how this shakes out. Now we're going to get in a situation where the market has moved up to the negative 61.8. So yes, now we have a full halfway back of the day down here, but now it's going to be a little bigger, 16, with a stop at 1450. It's just under the 61.8. Again, yesterday's first halfway back did work out nicely. So I might take a stab at it here at 16s. We've got another 4 or 5 points to go to break above highs from this range. Let me get my market profile going. Traded up to a 19. So we are in definitely closing in on open space, just meaning that there's not going to be a lot of resistance to the left. And if you can get in a long setup and the market does run, you're going to want to hang on as long as you can, because it might be a day where there aren't very many setups if we get moving higher. And then we do have that new home sales number at the top of the hour. So if we were to, one thing I do look at is like on this 5-minute bar, the low is 16 and a quarter. So that means if we come down to a 16, we have broken the low of the high bar in the pullback. So a lot of times you'll see like an inverted hammer up here, and when we break its low, we get a little bit deeper pullback, or when we get a hammer, when we break its high, we get a little bit more of a rally. So one scenario, so here, like we have this is the lowest bar in the pullback. Here's the highest bar in the pullback. When it breaks its prior candle's low, we get 3-4 bars of pullback. When we break the prior candle's high here, we get a couple bars of rally. If I draw the opposing short, that takes us down to the halfway back long. So it'd be nice to see like a couple of candles. So this is basically a bull flag is setting up. And if we can go another couple of candles sideways, maybe we come down and then get a little hammer candle here. Usually you get, 3 candles sideways, 2 to 4, but 3 is usually what I look for, where we have, the the bigger body candle and then 2 that are kind of inside, and then the next candle breaks out. So here we have the bigger body candle. The next one kind of gave that back. These are pretty small, only 2.5 points. Haven't taken a whole lot of trades in April. From the middle of May to the middle of April, there haven't been a whole lot of opportunities. A couple bigger winners on the gap days. I think I had 2 5-minute gap plays over the last 4 or 5 weeks that were decent winners. 10 points or more, but not a whole lot to speak of. Like yesterday, like I said, was a trend day, but as we come in and look at the actual chart, you get these tails on the larger time frames. And then as you drill down intraday, you see those bigger channels forming, deeper pullbacks. Go back here real quick to where, a 50% would be, or the 60-18 is breaking by a significant margin. 60-18 breaks by a significant margin, but we continue in the uptrend. Yeah, again, spending time here is sort of what I was expecting, with a couple of bars up and then moving sideways. So this is the pole, the initial push higher, and then this is the flag where we kind of move sideways. Yeah, we don't always get a deeper pullback with these bull flags. One option is to use, now we're only about 7 minutes away from the top of the hour where we have new home sales, but today would be a day where I might look at using a buy stop 1 tick above highs. So above the breakout. In this particular consolidation, it's 19 and a quarter. And we are far enough away from the top of the hour that I'm be okay with that. and not much resistance above us. So 19 and a quarter with that same 6-tick stop. Little double bottom here. Could draw up a retracement like that too. If you were long from over the first 5-minute bar at 1575, then the stop would be at 16. So that's also something I look at, like where are other setups occurring and where would my stop be? Because there's likely other folks who might have stops at that same level. And we might get a little bit of a triangle up here. We see that sometimes, like the bull flag on the larger time frame, on the smaller time frame can look like a little bit more of a triangle. 1775 is an option. We've got this double bottom here. We didn't make it all the way to the 50%, but it would be kind of an anticipatory trade where the target is above highs. We'll see what we get. When we have this potential for open space above us, I lean more towards, or I'm okay with anticipatory trades because the reward has a much bigger payoff. So a little higher risk, a little higher reward. But interesting, the breadth still declining. Close now 1-to-1. So I got a buy stop at 19 and a quarter. Also looking here at 17, it'd really be 20, it'd be an 18, but 17 and a quarter, or 1775, excuse me. You know, when you go to these consolidation areas, you do get a lot of sort of energy building up, and they can pop pretty hard at times. You can take this little double bottom, break of the opposing, pullback setup, kind of take a picture of that, and you see that setup all over the place. And so then it's just a matter of looking at the context of where that setup's occurring to determine, if you want to take that risk or not. But that's a pretty common setup. So far the 1775 is getting a little bit of traction. If we can go a tick higher, it'd be nice. There we go. Okay, so I'm going to bring my stop up to 17 and a quarter, just one tick below this swing low. Actually, I'll just do 17 below the 61.8. So that cuts my risk in half, even though I haven't gotten the first target hit. Ever so close. Also, when we touch, like when we make a double top, that's also an opportunity where I look for tightening my stop. In this case, just to 17s, because if the double top fulfills, that means we would break down, and where would the sort of confirmation of the double top and the short be beginning? it would be breaking the very first swing low. So where would the failure be? That would be, where I would want to get out. So that's where I would be looking to place my stop. So no first target hit, but I'm going to leave my stop at 17. 17.25 is technically below the 61.8. But since it's so small, 17 gives me just an extra tick of room. And you can see where, like, that buy stop at 19.25, it didn't break highs, so there's no fill. It's when I want to see when I'm doing a buy stop to get into a long, I want the market to punch through my order, hit 1925s, go through it, and immediately go another like 1.5. So here we broke through highs, and I don't want to see like any, major pullback or resistance here. I'd like to see some like tick, 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 boom, a quick point higher to show that there's people who are willing to put on bigger positions up at this level. And we are at the top of the hour. Check on that new home sales. Still about the same. We've got this one candle low. And pretty small up here to get really micro, like to draw the next retracement and put your stop at, basically it'd be break even 1775, which is one tick below this candle. I don't want to get out of this trade if it might be the only one that pushes higher. So I'm going to leave it at 17s for the time being. I've got my first target at 1975s. So we got to go another 2 ticks, one to get there, one to trade through. A little trick for those that do trade on a sim account. I don't know if this is still the way it works, but when I first started years ago, about 10 years ago, hold that thought. You can do things like split your stop. You could put, so like if you have 2 contracts, you could put one stop at 18s and one at 17. There we go. There's our pop. So that's exactly what I'm looking for. See how all of a sudden it's like, boom, we're up a point? That's what I want to see with like bigger trading coming in. So first target hit at 1975. Now we have a bigger move. We didn't pull back all the way to this first 50% here, but we hit its target. So I'm going to draw the full. I'm going to put my stop up to 18s now. And we're going to just try to stay in this guy as long as possible. So 18s. So that's how you get your stop to break even. You use the chart and sort of disregard. I disregard the trade ladder, so to speak. I'm basing my trail stops and things off of the chart itself. That 5-minute was did hold today. So here's that 3 candle sideways, the bull flag, and then the pop above that flag. And in the so the 5-minute working out nicely so far today. Didn't take that one. The 1925 long above highs. See how we broke highs and then we punched through, and that's a good way to get into a trade when we have open space above us. So I'm going to leave my stop at 18, and I'm going to watch for, if we get going a little quicker, I might consider trailing one or two contracts below each candle here, but like I said, 2350s is not very far, and I'd like to keep as many contracts on as possible because you don't get these opportunities very often. 5. So if we get closer here to 2350s, I might. So I'm going to bring my stop up on. Just start with 1 at 2175. That's 4.5 points. So 2175 is just a tick below, this high candle. I'm okay taking a little bit off there if we get a pullback. See how this candle is really big. If we get another bull flag, it's nice to kind of take some off right at the high. So yeah, there it goes. Okay, so a little bit off at 2 points. Another contract off up here at 2175s. Stop at 1850s, which is a little bit of ways away, but I want to see this thing move above 2350s. I'm going to get rid of this initial guide. Let's look at where the full, I guess I could have adjusted that, full retracement on the day is. It is 17 and change. High of the first 30 minutes. That's good. 19s. Oops. So it's interesting that the breadth is hanging out at 1 to 1. Oh, there was a high tick that I missed. Good thing I brought my stop down. 03, 04. So it's not the high. The high tick did not occur at the high of the day. So we could continue and should continue to make new highs. 19s in the market profile. So the 61.8 now you can see lines up right with the top of the first 30-minute range. That's good. That should act as some support if we do come all the way back down to it. I've been waiting for this breakout day for a couple of weeks now. So I'd like to milk as much as I can if it does really go. Like we gapped here. We were in this little box back here, and then we gapped up, and but then we just kind of moved sideways. So I'd like to see, this day where we kind of opened up near lows, filled the gap, and moved higher. I'd like to see this turn into. So far, we're only a 10-point range. This could be a 40-point trend day and take us all the way up to highs. But see, by the being able to scale out is so beneficial. You can take, even with just 3 contracts, and you take one off at the negative 23% or at the 2 points or the negative 23% target, something around there, something around 2 points. And then the second one, if you took it by trailing below the candle for 4.5 points, so that's 6.5 points. And with an initial stop of 4.5 points, you're already above 1-to-1 on the whole position, and you still have one more contract. So, even with 3 contracts, you can do a lot. So we'll see what kind of buying, if any, there is at this next 50%. And then, like I said, the full halfway back is lower, but we didn't even make it into the very first halfway back of the day. So I'd be a little surprised to see us pull back to this 50 and then bounce. If we do break back into, let's say this ends up being kind of a double top up here. So the high for today so far is 22.75s. The high back here is 23.25. So let's say we get some resistance and this is a double top, then we should go from the top of the first 30-minute range. We should go back down to lows and then some. So if we do sell off, and then if I do get kicked out down here at 1850s, then there should be some good short setups. So like the alternative to a strong start to the morning with this pretty strong uptrend is a pretty substantial change in direction and then move lower. So if you kind of think about it in like chess terms, where you're thinking a couple steps ahead, yeah, the setup that you wanted to materialize may not, but because of that, or in light of that, that might lead to some more good setups in the opposite direction. But you can't get so stuck on, it's going higher, it has to go higher, and I'm riding this thing to the moon. You have to be okay saying, oh, well, okay, it looked like it was going higher. It started going higher, and then it failed at 61.8. Now I have to be able to flip direction and be okay looking for trades in the other direction. And here, again, big body candle. This next candle, about half of the first one. I would expect this candle to be another kind of inside bar, and then I'd look for a breakout in the next candle. Sometimes they come down lower and then rally, and you get a little hammer. But I don't like to see them come all the way, like these following inside bars. I don't like to see those come down and give back the whole move up. So this leg here, I consider the 2 candles of the rally. The rally kind of started down here at lows of the day and rallied up to here. You could kind of look at it as the next rally started down here and moved up to here. So this area then is like half of the move, and then this is the other half, 2/3 of the move. Same with down here. Here's the consolidation, the flag, and then this is the other 2/3, the rally. So good price structure and relationships happening here with the move higher, kind of a push and then a base, and then a push up and then basing. And then if we break into new highs, I would put my stop underneath this swing low, 29.20. So it would be a 29.1775. But at this point, if I draw the opposing short, we haven't quite broken it. We just did. Right as I got it up. So we have broken the opposing short. Same thing without touching the 50%. But just going to leave things alone for the time being. Give it room to work. You ask yourself, would I feel worse tightening my stop and getting stopped out, before it moved higher, or risking an extra point and getting stopped out because the market sold off big. I would rather risk an extra point to give it a little bit more wiggle room to stay in, basically risking a point to make 10 in some sense, because if this thing goes higher, it's got a lot of potential to spin up pretty quick. And that's where the money is made, however you want to say it. As an individual trader, I'm not making a living taking 2 or 3 ticks at a time. Like, that's just not sustainable when you're fighting against high frequency trading firms. Maybe there's some guys out there that can do it, but you're splitting hairs with taking small gains. To risk 2 ticks and make 2 ticks and be above 50% win rate, and then take hundreds of trades and then offset your commission is a losing proposition. So at least that I haven't experienced any sort of at-home traders, individual traders able to take advantage of that. So what I was saying before, though, if you are trading on a sim account, the way it used to work is price would come down, and like if I had a long order at 21.25s, price would come down, and on the sim account it would touch it and it would fill. And when I first started day trading, I was trading on a sim account, and you get these amazing numbers and you think, oh wow, this is easy. Then you go to live, price comes down, you're staring at your dome, it's sitting on your price, and and then moves away and you're not filled. So a little trick that I would do, and I don't know if they've adjusted the sim platforms or whatever, but I would just put my order, if I wanted it at 21.25, or for better example purposes, the actual long setup, 21.25, I would round up 50. So 29, 21.50 is where I would want to place my order live. So on the sim account, I'd place it at 21.25 so that I would be sure that it traded through the actual order that I would have placed live, and fill me. And then on the flip side, if I have a target up at 22.75s, that's where I would place my target in real time. On the sim account, I would place it at 1 tick higher, 23s, and then that would ensure that it's sort of a more realistic fill. And then my numbers looked a lot different. And then I was able to actually go in and make some tweaks and figure out some areas that I could improve and whatnot. And that's definitely making little tweaks was beneficial, but at the end of the day, kind of keeping things as simple as possible was still the best approach. Yeah, Jim, I like multiples of 3. I trade 6 a lot. 3, 6, 9. 12, I don't get much more than that. You kind of reach a sweet spot where you start to get a little bit uncomfortable. You dial it back, and then you're more in a place where, not that you don't care, but just that it's kind of a happy medium of, someone asks you for $5, you're probably not going to lose sleep over it. Someone asks you for $500, you might have to go home and ask your wife. So again, getting kind of a on the 512, a triangle pattern, a lower high, would maybe see a higher low here. This is now the third inside bar. I'd be looking for us to break out here. In the next couple of minutes. I still have my stop at 1850s. We'll see if we come down and actually tag this 50 if there's buying. We had a little bit of a bounce up here. Same setup I took earlier where we didn't touch the 50, broke the opposing, only before it was that double bottom here. This one is just kind of a V. So there's the 50. I would imagine you would have a fair number of people, who bought at the start of the year looking to take some profits up here, and that's could be a bigger part of this little stall out that we've had the last couple of weeks. So here's the little dip below the consolidation. I would like to now see a push higher. I wouldn't want to see us go too much lower. The low of this, ironically, 1850 is the low of the bigger body first candle in the move higher. But I'm just going to leave my stop alone. I'm going to draw the full opposing here. Breath still at 1-to-1, so that is interesting, not getting much stronger. You do have sort of opposing candles. Market moves up and then selling and then up and then selling, so could be getting some bigger turnover and exiting of profits. I mean, from lows of the year, pretty solid run up, and that was the start of the year. So, I mean, there's a lot of hedge funds and bigger firms out there that have already made their profit goal and then some for the year, and we're only 4 months in. So that's a good reason to kind of scale out and then be able to take different kind of risks in the second half of the year. When you've already made your big number, you can take some bigger risks with basically with some of your profits, and still beat your prior year just by keeping conservatively with a portion of your portfolio. So that stuff is important to think about, or at least consider, because it's those bigger hedge funds that are the ones who are actually pushing the market around. Those are the positions, thousands of ES contracts and whatnot, that actually move it. 10, 20, 30 contracts. That's why I don't really look at time and sales anymore. I couldn't really make anything out of it. So stopping at the opposing short. So stop into the short and the long, but no real swing high to have broke on that long side. But see how that 5-minute candle dipped below, but still on the way up. If I had taken in a situation like this where if I was trailing 5-minute bars, I'd be leaving my stop underneath the initial big body candle. That way, as the following bars, they're inside bars, but then you get one like this that dips down by a couple of ticks. Then once we break out, then I would move my stop up underneath that candle's low. There's our break of the opposing. So if we come up and break highs, or if we double top, then I'd move my stop up to 19.25. And again, the reason I do it when it double tops is that the break of that swing low would sort of be the confirmation that it is a double top. So where would the trend be over or the failure point be? Well, that's where I want to place my stop. Where would I be wrong? Where would the trade kind of be broken? Those are the kind of things I'm thinking of. If we get a high tick up here at highs, I might consider taking another contract off or at least start trailing underneath each candle's low, but so far that's not the case. So. But a little bit of that channeling, which you do see with the bull flag, the move up and then sort of a channel, a flag, if you will. Getting there. There's our double top. So I'm going to move my stop up to 19.25. And that high tick as well. So I'm going to also take one at 22. Just going to put a stop up under there, 22. We're going to do 21.75, but I'm just going to leave it at 22. For the same reason that if it is the high of the day, if we don't make a new high price in the next couple seconds, then at least I'm locking in another 4.5 points. Looking for another punch through and then like a quick point higher. And 23.50s is very, very close. That's why I don't just take it off at highs, because I want to see, I don't want to just cap the gains. I just want to cap the downside. Four candles with this. There we go. I am going to continue up on this contract. 22. I just moved up to the quarter. 22 and a quarter. I'm just going to trail each candle. And then eventually I'll bring my stop up on the developing 61.8. $22.50. $22.75. I'm just watching the low of each candle. Oh, there's one tick above highs. So there's another contract off. Okay. 2075 would be the developing 61.8. See how we didn't make it all the way to the negative 23, but with these last few contracts, I might split the stop here. So 19 and a quarter and 2075. It's not much of a difference, but I'm going to do that. 2075 and 19 and a quarter. Don't have a high ticket highs, but we did pierce the high. You can see over here 2350s. Pierced that high. And then immediately was met by selling. And I'll leave up this retracement that we tagged at the 50 until we either touch the negative 23 or break its 61.8. Another kind of take back of the prior candle. That's interesting. This is another bull flag out of these two candles and then taking back 50% of it. So we get green bar, red bar, green bar, red bar. Definitely worth noting. And breaking the 20 into the 2075, one tick away. All right, so there goes contract number 5 at 2075. And then my last one is under here at 19 and a quarter, although you could say if we retest, it's, is that under here? Yeah, I'm okay with that. 19 and a quarter underneath this major swing low. If we come down and retest the 50 here, it's likely that it'll be a little messy. be a little bit surprised if we came down and double bottomed exactly. I guess I'd be more if this is a little bit of a shakeout where we dipped below the 61.8 and then rounded higher so that new folks weren't able to get in, and then it was able to move higher and then people end up chasing. That's a scenario. Full halfway back of the day now moves up to a 29.18. Just kind of running through a handful of things in my head. The advanced decline line has improved, but the breadth is kind of right where we were at the open. Where would I get long again? So I've got one left with the stop down here at 19.25. Maybe if we came down to 29.18s, then I would look for a small long off of that, off of the 512 tick chart, especially because that kind of lines up with the top of the first 30-minute range. But like I said, it wouldn't. One scenario that can happen is we kind of come down and get messy down here. And what was it, 2050 was the low, 21. So if you had your order at 22s, that would have been 6 ticks. But what might happen here is we round out and the market doesn't let new people come in down here. And if it pushes to a new high, then you get people chasing. So here's kind of that tail, just like we saw back here. We dipped below the prior candle's low by a couple of ticks, and then it was bought up, but it didn't make a full retracement. I mean, the market's only up 60, so it's not, I'm sure it's not gaining the media attention, but breaking this high is pretty significant. Let's go back to the market profile. Draw the short up. Watch for that to fit. I'll leave that long for the time being. Triangle in the Dow. That might lead to a pop around here at the apex. NASDAQ was kind of like the ES, just moving higher, not kind of a triangle consolidation, but So 2 off at 4 points, 1 off at 4.5 points, 1 off at another 4.5 points, 1 off this 2075 for 3 points, and then the last one I've got, my stop is down below this swing low at 19.25. So basically another 1.5 above the entry. And it's 7:40 and we're still in the same trade. Quality over quantity. You can say that, it was kind of got a little bit messy up here. Not the straight shot higher. Now we've broken both tracements. I'm just going to get rid of both of them. If we can double top or go higher, I would. There's our double top. Go up to a 20.25. Probably below this candle. Yeah, 22.25. There's our new high. So a definitive break above highs of the range from this last week. Right here. That's big. Now we just need to close above it. Another 5 hours. No new high tick. The next, now you get in a situation where we tag the negative 23. I would use the low at the 50 as opposed to this low here. I'm not really concerned with the market making a full halfway back at this point, at least within this trade. So then that brings the stop up to a 21 below the next 61.8, which is below the 5-minute candle. So yes, one contract's definitely the hardest one to trade, Stan, and you know that, and you know everyone who's traded one contract knows that when you only have one contract, you're constrained to having to make a choice. Do I take it off at the first target or do I trail? And so there's I guess there's three options. When I started trading on Sim, and then I worked my way up to multiple contracts to be able to practice different exit strategies. But then when you go to live, you want to make sure you're kind of mastering, you have your emotions mastered. So you got to start with one. And I literally just put a target out there at 3 times my risk, so at 18 ticks and a 6-tick stop. And I just left it out there, and I managed my stop, but left the target at 18 ticks, and it wasn't really concerned about the P&L. I was more practicing the trade management and being able to sit in trades as long as they were going my way. So, you know, taking 2 points and risking 1.5 points, well, you're not going to get rich doing that. So I found it better to focus on improvement, things that I could take with me as I go to more contracts. And then, you know, I got to 2 contracts as soon as I could. And now taking one off at that first target and having one to trail, it, you know, I spent a good amount of time at 2 contracts, and now you can, you know, take some good, you know, couple $100 out of a trade is not out of the ordinary for an ES trade with 2 contracts. I have plenty of good winning trades with 2 contracts, and you get in that habit of taking one off, reducing your risk, and then having a second one to trail. And then after some time, you get comfortable with that, you move to 3 contracts, and now all of a sudden, you got one to take off at the first target at that, you know, 2-point mark, and then one, then you have 2 to trail, and you can trail in multiple ways, and you can bring your stop up during the process, and all of a sudden, you know, you can make some decent money with 3 and 4 contracts for sure, with having a, you know, a modest amount of risk. Talking $225 with 3 contracts and making $500 or $600 is not that much of a stretch for the ES. You know, when you're talking 10 points over 3 contracts, you're only at 2 to 4 points per contract. And then $500 over 225, you know, that's a 2.25 R multiple, which is good. So again, I've got my stop at 21s. yeah, not expecting much more here. This is every single one of these rallies have been met with a deeper pullback, and the fact that we've gotten to this point, breaking highs, and I'm down to the last contract, tells me that there's more resistance in the market than it's leading on. Like yeah, we go higher here, but only by a little bit, point or two. And as I come back to the breath and seeing it close to 1-to-1, that makes a lot of sense. So I don't feel bad about it. Just using the market movements and condition to dictate, as opposed to trying to flare goes, trying to force things on it. So that's another 3.25. So you're at about 19. $19/9. What is that? Shy of 2.25 R. Now from here, you're kind of left scratching your head. A full retracement on the day. So we've already broken the high of the range that we've been in, but then immediately was kind of met with selling. 19 or 29.1875. This is the next 50% retracement, but I wouldn't take that as like a blind limit order. I would let the market come down, trade, and then look for a 512 off of that level. But we're getting kind of late in the morning. We'll be getting into the lunch time in another hour or so. And with some of these pullbacks being, a little deeper, we've had actually a break of the 60-18. Where was that one? Here. Break of the 60-18 to the downside. Then we break the 60-18 to the upside. So even though we're trending up, I wouldn't call it a very clean trend day. I'm going to leave this retracement up just because it has been messy, breaking the 60-18 and then going higher. Just to kind of keep that reference point. And if you have a hard time if you have a hard time being able to stay in trades longer because you're afraid of taking a full stop out, you definitely need to shrink your position size, and maybe considering something like the Top Step Trader program, where you're spending $100, $150 to go through the validation process, proving to yourself, proving to to pass the combine, then get a 90-10 split. If that allows you to trade better because you're essentially only risking $150 to get through the combine, then doing things that focusing on improvement. That's why I say going back to sim for a week can do a lot for breaking through some bad habits. But if you stay stuck with live with one or two contracts, you can just kind of grind down some bad habits that can be pretty tough to break if you're doing them for long enough. Let's see. I'll be no, not this week. I'll be here all week this week. Getting about that time where we'll be heading to Colorado in another month or so. Starting to see 90 degrees down here in Phoenix area. But it's been a pretty awesome spring with the super bloom. We've had so much rain that for a while things are starting to turn a little bit less green now. But man, for a while the grasses and the flowers, I mean, you'd be on the trails and you'd have 1.5 foot tall bright green grass on either side of you, and just incredible poppies, oranges, reds, yellows, and pretty cool. Not something you get very often. The snow this year, record snowfall. Yeah, it's something around there, Stan. I think so. There's a couple different. You can attack it from a couple different ways of a accessibility to a larger. You're basically starting with like a $50,000 account, 50, 100, 150, I think, and then they have parameters, which the parameters are coincidentally just about identical to the way I trade in terms of limiting losses and trading a relative number of contracts based on the risk parameters. So trading 3 contracts and generating, I think, $1,500 or $2,000 with a reasonable drawdown. Like the habits that you build with going through a program like that, even if you don't trade with Top Step, going through a constrained environment that keeps you accountable. That's the biggest thing. It's easy to go on a sim account and kind of make some mistakes and just not count that trade, or to trade live and just kind of twiddle your thumbs and kick the can down the road. But to have more accountability and very rigid constraints that are there to protect you, you end up creating and developing these really good habits that then you can carry back to trading on your own if you want to. But I know some people trade better when they have less capital at risk in kind of that prop firm model. Other people trade better just doing their own thing, and that's fine too. But the idea is, you're not going to make $1 million trading 1 or 2 contracts, so you might as well spend the time developing good habits so that when you get to 3, 4, 5 contracts, you can trade well. So kind of as I thought here, coming down, breaking the 60-18 by a wide margin, and then sort of returning up towards highs. Nothing you can do about that. You want to trade the chart and not worry about what might happen in the future, because if you start getting wishy-washy with your stops and the way you're managing your trade based off of one particular trade, and you start changing things and you say, well, I'm gonna just widen my stop or move it down back here after I already had it moved up, and just kind of getting in that micromanagement mindset, then it's going to affect all your other following trades. So you want to try to keep things as the same as possible. Sometimes they're going to work out really well, and sometimes you'll get a little bit of bad luck. Case like today, I wouldn't say it was bad luck, just good trade management, and the market's just not punching through quite yet. We still might, but it's not doing it on this first leg up. And looking at the 5-minute chart, it's like move up, bull flag, consolidate, and then this got a little weird through here, but green bar, red bar, green bar, red bar, and we have not seen a clean trend day in probably a month. So this is by far the best trending environment that I've seen. Now, taking like a 24.75 breakout, it's an option. You could do it with smaller size, but so far the last couple of times we pushed into new highs, we didn't scream higher, but we're only 25 points away from all-time highs. So that could happen in one day, like today. Might take a couple of days, but you don't want to get chopped up trying to get into a move at highs just because we're at highs. So that's something to consider as well. See, like we're going higher, but only like 2 ticks. We had the one push, strong push earlier that moved up like 1.5 points in just a matter of seconds. But may not get that big move today, or that all the way there. But just a close above 12.75 was going to be significant, will be significant, and a close above 23.25 would definitely be important. 802, 802. So currently a high ticket highs. See if we go a little bit higher price wise. So that high ticket highs is holding. Wouldn't be surprised if we get a push above to make a new high price here in the next few minutes, but at the time, at this moment, 802, 802, high ticket, high price. I'm just looking back here on the 512. I mean, it is pretty messy, these deep pullbacks. Yeah, we're going higher, but they're all being sold into. up here, we don't really have a swing low to break. We got this one candle up here, which you could take a short off of. But the way the market's been going, kind of sliding in one direction without a whole lot of trade setups, the last thing I want to do on a day like today is overtrade the afternoon or the latter part of the day and just give back the gains that for once were fairly easy to accumulate, at least relative to the last couple of days. So I think we'll leave it at that for today. I'd keep watching here, high ticket highs. If we break this swing low, you could take a stab at a short. It is a high ticket highs. But breadth is actually a little bit about the highest we've seen it, and the advanced decline line as well. So it would not surprise me at all to get a push up in price here. 802, we're at 806. Yeah, that would be a short that I'd maybe pass on. But we have been getting, green bar, red bar, green bar, red bar. So I'd be surprised if we came down and came all the way down to lows of the day at this point. And I don't know who's reporting after the bell today, but we still do have some earnings announcements, so we could shake things up a little bit this week. But we're only 25 points away from all-time highs, so it's almost like there's nothing that is able to stop us from getting there, regardless of what the news is. So I think we'll leave it at that for today. If you have questions, or I know I was chatting with a few of you about the summer apprenticeship program that I'm going to do. If you have other questions, feel free to shoot me an email during the week, tim@eminimind.com. So thanks for tuning in today, and I will post the recording into the trading sessions video, or trading sessions area of the dashboard, and wish everyone good trading this week, and we'll talk to you all soon.